Trent Bradshaw with Bradshaw Financial Planning and Mind Your Money, where education is key to financial success. Thank you for joining us today. Today is March the 10th, 2020. We're reaching out to you. This video is being filmed in the AM hours. Looks like we're going to get a bounce back in the market after extreme down day yesterday. That's a good thing. We're also expecting to have some type of response from Congress to see what kind of adjustments they're going to make in monetary policy, or whether they're going to put some type of fiscal policy out there that will help the individual consumer. That should come after lunch, so keep an eye on that. I want to jump in and talk about three charts to kind of put everything into perspective what's occurred in the market. The first chart we're going to look at is the S&P 500. It's actually a 2.5-year chart. But what I'm wanting to show you is this latest correction has brought us back to where we were in January of 2018. And you'll see those two levels circled. The other thing that I'll point out too, and I've had a lot of questions about that, they've asked, are we at a bottom? Is this it? Have we reached the extremes? Well, the answer to that question is nobody really knows. But what I can tell you, if you look at this chart, there's a lot of support of where we're at right now from where the market came from. So we've got to look at that as being a positive. And you'll see a line that I'll draw across this chart to kind of signify what I'm talking about regarding support at this level. There's a lot of trading within this 2,700 to 2,800 level. So again, that should provide some support in the near future. Ultimately, though, we're going to have to pay attention to what the Fed does. We're going to have to pay attention to what Congress does. And hey, do we have some type of medical solution in regards to the coronavirus? Is it going to shut down our supply chains? Are we going to continue to have slowing growth? Well, right now, obviously, the first quarter is going to be a tough quarter when earnings are reported. It's going to be a little surprise on the downside, I believe. But that could improve drastically going throughout the year, especially if we get a solution on the coronavirus issue. Jump to the next chart. This was the Dow Transports and the Dow Jones Industrial Average. Dow Jones Industrial Average is in green. It's the bar chart. The Dow Transports are in the blue or the black line that you see here. Well, to make this simple, if the transports are trading below the Dow Jones Industrial Average, normally that is a cautious sign. Right now, they're trading way below the Dow Jones Industrial Average as far as a comparison. And that is not positive going forward. That is a negative sign for the market. That's telling me that there potentially could be some more downside. All right, but a positive, let's look at a contrarian meter that we always refer to. It's the fear and greed index for the individual investor. Right now, that reading is sitting at 3. That's extreme fear. You go back a month ago, we had extreme greed in the market. It's been that quick. But normally, when you see these levels, as a contrarian indicator, it signifies that we're getting close to a bottom. Ultimately, if you go back to December 2018, that reading was all the way down to 1. And of course, after that point, we had a market rally for the entire year of 2019. So does this mean we're at the bottom? Don't know, but we'll have to keep an eye on it. But that is a contrarian signal that says we're getting close. This is Trent Bradshaw with Bradshaw Financial Planning and Mind Your Money. If you got any questions, let us know. Obviously, join us on social media so we can bring you some updates. Subscribe to our YouTube channel. Look forward to hearing from you. Hope you have a wonderful week, and we'll be back with updates.